But I think we have the management of Arvind Fashions with us.
Indeed, Arvind Fashion has reported a steady set of Q3 numbers, top-line growth of 14-15%, margins have expanded, the company's added 24 new stores. In fact, the company is also confident about sustaining a double-digit growth trajectory. Kulin Lalbhai, Vice Chairman, Non-Executive Director at Arvind Fashions, is joining in, and on the screen you will see what we'd like to discuss with him. Thank you very much for joining in, Mr. Lalbhai. Let me begin with your direct channel, which you yourself have said is the growth engine for the company. Now, direct includes retail, which is about 45-50% of the overall revenue, which saw a growth of 8.2%. And the other part to it is the online B2C sales, which is growing at 50% and is about 17% to the overall growth. So together, the direct channel is in excess of 60%. Will that continue? And if you can provide a breakup of retail and B2C, what kind of outlook do you have for Q4 and FY27?
Yes, I think the highlight for us this quarter is that we've had the highest growth that we have had year on year over several years. And what that is indicating is that all the work we have done on setting up the growth drivers, especially in the direct business, they are now showing fruit. So in a sense, just coming to your question, I think our retail business actually grew at upwards of 11%, and the online B2C grew at 50%, as you said. And these are two channels which are very strategic for us. So we feel as a company, there is a lot of square feet we can add across our brands. We are adding close to 15% on our 1.3 million square feet every year. We've also had very strong like-for-likes. We've got industry-leading like-for-likes. So that was 8% this year. So if you see, our retail has a lot of growth drivers. And online is a business we are inherently very bullish about. We've been investing in that business for a decade. And our brands are going from strength to strength. So as we get into newer categories, as we go deeper into .coms and launching our .coms across the portfolio, we have several new growth drivers which are going to come in the online space as well.
Okay, and can you tell us what will given how fast online B2C is growing, 50% in Q3, current revenue contribution is, I think, 17%. What kind of growth momentum are you seeing? What could the contribution rise to? And what are the kind of margins that you make in this business? Because the cost of acquisition of customers is also very high, and you're making investments here.
Yeah, so the best way to think about online is putting our online B2C and B2B together. That gives you a sense of the underlying growth, which is more in the 20 to 30% range. We are actually degrowing the wholesaling online and ramping up the direct selling. So as a combined channel, it's growing at 20-30%, which itself on such a large base, it's both put together, it's close to 27% of our company's revenue. That piece is growing very well. On a profitability, the good news is over time, we've really understood this channel very well and we've refined its profitability profile. So from a channel profitability perspective, it's the same or slightly better than some of our other channels. So change in channel mix is not going to have a major impact on our EBITDA. Our EBITDA growth is coming from operating leverage and improvement in our sell-throughs and gross margin profile as a business.
Yeah, okay. Kulin, hi, good morning.
Morning.
Just have a question. I mean, this relates to the overall dynamic and the worries that maybe this is past worries and future is brighter with the cyclical recovery, etc. But has demand taken a bit of a knock in some other, but all consumption related? We have seen, the general anecdotal feedback is that maybe demand has kind of come off a little bit. Can you tell us if that is the case or no, nothing at all?
See, at least for our apparel industry, I would say the last 5-6 quarters, we've had quite a lackluster kind of demand environment. In fact, I would say directionally it is positive. I think if you look at the series of actions taken, right, from income tax cuts to GST cuts and rate cuts, I think all of this is accumulating, and our belief is in the medium term it will be a positive. Our apparel industry, since it's a low ticket size industry, will not possibly see the very short-term upticks that you see in the larger ticket size industries like automobiles. So I wouldn't say in the very short term, right after GST, we have seen a huge positive momentum. I would say that the momentum remains similar with a slight positive bias. And I would believe that over the next couple of quarters, the impact of all of these cuts should start showing in the consumption numbers.
Okay.
Kulin, say next, again, not a guidance per se, but would you be able to give a, say, same-store sales growth guidance, or say over the next, directionally, what should we expect in the ballpark?
So we have said, our range of growth in current market conditions should be between 12 to 15%. The good news is we have been at the higher part of that limit. We've been a little ahead of our plans on growth. So I'm cautiously optimistic that, we should stay in that higher band that we are talking about. Our growth drivers are still kicking in. So I'm feeling quite optimistic, and our like-for-like, as you said, also has been high single digits, which is one of the industry-leading productivities growths in the business. So currently, we are set for being at the higher range of that range that we have given out.
Kulin, very quickly, there's a buzz that you're going to be acquiring a new brand. Is that correct?
No, I wouldn't want to, comment on that.
But is it possible?
Our core strategy is the 5 brands to scale them up. We want to make each of them multi-thousand crore brands. Our largest brand, US Polo, which is well above 2,000 crores now.
Yes.
That brand has grown on that base at upward more than 20% this quarter. So it's just showing the sheer potential of our large brands. So the core part of our strategy is to make these 5 brands bigger, bolder, and larger.
Okay, I hear that you're looking at a new brand, so we'll wait for that announcement if in case that's true and there's some conclusion out there. But the point on US Polo, as you said, it's a 2,000 crore brand. Now, on this sort of a base to keep growing, how confident are you? Because that's a bit of a worry, right?
So that's the point I was trying to make, that if you look at, say, a brand like US Polo, we believe our retail footprint is still severely underpenetrated. We are building bigger and better stores. We have so many new segments which are just emerging. Our footwear business has become a few hundred crores, but we think it can become much larger. Our women's business just got started a couple of years ago. Our kids and innerwear business franchises are just growing up. In online, it's become the largest brand with more continued momentum. Our .com, which launched a couple of years ago, is now coming to size. So I think in the India of today, we shouldn't have a mental model that 2,000 crores is a peak size or a very large brand. We feel very confident with our growth drivers that this brand will have this strong double-digit growth on such a large base.
And we we will chat again as you execute on that, and we hope that is the case. Thank you very much, Kulin, for joining us.
Thank you.
Really appreciate it. Shrikant Chauhan is with us, back with us. It's 9:12, 3 minutes to market open.